Hello, beautiful traders. Welcome back to my channel. My name is Desmond Samuel, and I'm back with yet another episode of our weekly outlook. Now, if you're just coming across this channel for the first time, this weekly outlook is just a playlist that I have created on YouTube on my channel. So, actually coming on here and it's just about me giving you guys the best trading opportunities for the weeks ahead, and then also using this to explain the recent events that we had in the forex market recently. All right, so those of you guys that have been aware and you guys have been following fundamentals for a while now, we've had FOMC and CP and NFP. So we had FOMC on Wednesday and today's Friday we had NFPR. So I'm recording this video on Friday just in case you see this any other time. Right? So this is always on Friday night. So now I'd like to start with Euro USD because obviously this is the easiest way to trade, number one, and then this is the most traded instrument in the entire financial market. All right. So and it's also the most liquid. So now I like to do something called a top-down analysis where I go from the monthly time frame all the way to the weekly time frame, to the daily time frame, and I execute mainly on the 4 hour, 1 hour, and sometimes even 15 minutes time frame. All right. So now what you're seeing here is the downtrend on the euro. So this is like the overall trend on the euro. We are seeing series of higher lows and higher highs. Sorry, lower lows and lower highs here. So this is a high, this is a lower high, lower high, equal lows, lower high, lower low, lower high, equal lows, equal highs, lower low. Right. So now the market just came on here to create a lower high here, which obviously it should do. So whenever you're having any healthy trend, it is also characterized by healthy pullback. That is, if you have an impulsive move that has gone from point A to point B, the market should pull back to at least half of the entire impulsive move, right? So if you bring the Fibonacci just like so from the swing high to the swing low, you see where this lines up perfectly, right? So the market is actually trading in a supply level, right, between the 0.600 and the 0.5 region, and then this is also pointing to the downside because this prior to this whole drop here, we had a double top here, right? The double top that is equal highs here, collapse, neckline broken, and then this led to this entire collapse here. Obviously, backed by the interest rates of 2021 to 2022, when the Feds were hiking the rates, obviously, and when they hike the rates, the dollar tends to rally, all right? When the dollar rallies, you have the euro, NZD USD, GBPUSD, AUDUSD, and all of the XSF USD pairs just collapse to the downside. And what we have before us here is the euro USD. So on the monthly time frame, we are bearish. On the weekly time frame, what are we doing? We ought to be bearish on the weekly time frame as well. Since the major time frame being the monthly time frame is bearish, and on the daily we are actually bearish. And if you look quite closely, you see this chart pattern here. So these chart patterns are also intermediary patterns in the sense that you could have one play as a reversal and as a continuation chart pattern at the exact same time. So depending on the trend, so this is the trend here. The trend is down, bearish, right? So once you're in a downtrend and you see head and shoulders pattern or a double top, this is a continuation chart pattern. Then this is also the reversal of this medium-term pullback that we had here, right? So this pullback was a bullish pullback, and then we put in a head and shoulders pattern. So this is pointing south. This is a reversal chart pattern for this medium-term pullback here, right? So now scaling down to the daily time frame, we have actually from the weekly time frame, we have something that is like a double top, sorry, a head and shoulders pattern here. We have the head, shoulder here. And if you look left, you look right. So this is head, shoulder, and then on the right hand side, you have another head and shoulders pattern here. So this is pointing south. Right? Every single thing is indicating bearish. Right? So this market is pointing to the downside, quite bearish at the moment. And scaling down to the daily time frame here, we have our neckline of the head and shoulders pattern. That is the mini head and shoulders pattern broken. I don't know my chart is showing. So here we have the head and shoulders pattern here, neckline broken, and then the market just put back to retest it properly. And now we have a confirmed breakout on this guy here, and then the market is just pulling back for a potential continuation all the way to the downside. All right. So ideally, I am actually highlighting the euro dollar to the downside long term. All right. Now the market had to pull back here following a negative NFP numbers for the dollar. So we saw that deeper pullback from the dollar, hence resulting in this deeper pullback on the euro. So if you now bring your trend lines like this from the so this is your high, this is your lower high here. So you got your trend line like so you can see that the market was just coming on to fulfill technical levels, and which now further stresses the point that the fundamentals only play in line with the technicals. All right, so the technicals already give you the broader picture, the broader perspective, and then the technicals just come into play with volatility that aids the market to move a lot faster. Do you understand? So now looking back at this, now we have this is a high, this is a lower high, equal lows, lower high, lower low. All right, so technically the market has to come in here to create a lower high, and I like to use something called Fibonacci. I don't know if you guys use, I don't know if you guys are aware of it, but I like to use something called Fibonacci. So I draw my Fibonacci from the swing high to the swing low, and I noticed that the market was just pulling back to fulfill technical levels. I call technical levels. So whenever you're in a trade and then you see something like this, you should always wait it out. Do not be the important trader that sees a bullish candle and then wants to buy, sees a bearish and then wants to sell. Wait for the market to align perfectly. And as you can see, NFP came this thing, the market spiked up, and then on hitting this trend line here, it collapsed all the way, it melted all the way back down. And now we have the market trading in between the 0.6 and the 0.5 region, still signaling bearish for us. All right. So now what do we do next week? So personally, I'm not in a trade at the moment. I won't even advise you get into a trade at the moment because this will not look like a fake out on the 4-hour time frame. Now, what tends to follow a fake out is an exponential move in the opposite direction. All right. So we have this supply level here, and the market just came to clear and sweep some liquidity. Now, if the market fails to break up to sustain above this level next week, then they may see this guy blip all the way down. I am actually still bearish on the euro dollar, and I would only enter a trade on this pair on only on one condition, that is because I like to see the market give me some extra confirmation. All right, so I would like to see this level get broken on the euro. So once I see that the market has broken all the way back down inside of here, and then we've cleared this level here, we now have enough space to actually drop this guy on his head all the way to 1.05360. And obviously, I advise you guys to have contingency plans in the sense that if a particular instrument doesn't meet your entry criteria, or if a trade does not meet your trading conditions that you've set in place and the rules, what do you do? Right? Because it is either this or this. There are no in between. It's either this happens or that happens. So in the event that we actually get to rally all the way out, which is a lot less likely, but in the event that we actually get to blow all the way out here, I actually see this guy, because this will now be the fake out. Right, so the fake out will now be what we have at the bottom here, and now this market would most likely rally all the way to the supply levels here, right? To either any of the supply levels, the 1.08642 or the 1.09352, whichever one, right? But those are the solid supply levels. So that is that for Euro USD. Long story short, I'm actually very still bearish on this guy. However, I have no entries yet until I see a decent pullback, and then break below this yellow bar here. Then I'll be a lot more convinced to drop this guy on his head. Then hopefully the market continues in this in the direction of the overall chart pattern, which is bearish. Once this neckline is clear, we have enough space to the downside here, and we are talking to the tune of about 812 pips drop. All right, so but first of all, I have to take it step by step. So first level here is this 1.05300, provided that the market breaks back down below, and then obviously if this level gets cleared here, we have the market expose 0.96878, all right, which is just below parity. So that's that for the euro dollar. The next pair on my list now will be GBPUSD. Hold on, guys. So for GBPUSD, it's quite simple because it has a similar structure to that of euro dollar. So what we have here is a decent a decent breakout, all right? But for the NFP, the market pulled back significantly. All right. So here we have the GBPUSD. So it's similar to what we have on the euro dollar, where we were in this range for a long time here, and then we broke out here, and then we actually came to retest this neckline here, which was also a supply level. So the market came on here, and the only bullish candle we had was this guy before this collapsed to the downside, and then this is what happened. The market just came back to test that supply level. So ideally, I'm still very bearish on this guy, provided we stay below this yellow bar, right? So provided you stay below this yellow bar, I'm still very bearish on this guy. Now, if you look closely, you see my alerts here. So I've set this alert in the sense that I want this market to, you can see this in this melt back down. This was a big bullish engulfing candle that melted all the way back down, and this is a daily time frame. So this only happened on Friday. By following the NFP data, this guy ran it all the way up and then it melted all the way back down. So this is showing clear signs of selling pressure on this guy. However, I'm still not convinced because, guys, you can never put anything past this market. You have to be extremely careful when you're dealing with this price. All right. So the market came on here, tested the third touch of the trend that happened here. So you have the first touch, second touch, and third touch, and typically in trading, the third touch tends to make the most difference. All right, guys, hold on. Give me a second. Right, so the third touch of the trend line tends to be the final strike. All right, and then if you look closely, this is also in line with the trend. We have the high here, you have the lower high, lower high created here. And technically speaking, if this market indeed wants to reverse to the upside, we need to come and see at least an equal low from around here, which will now result to a sharp pattern called a low bottom and potentially rally to the upside. However, like I said, I'm still very bearish on this guy, and Fibonacci wise, if I plot my fib like this, you can see that the market came in to test the fib zone properly. You can see it rose above the fib level, then melted all the way back down into the supply level. So long story short, I'm equally bearish on the pound sterling. All right. However, similar thing happening to the euro. If I'm to take advantage of this opportunity, I like to see us clear this structural level here, all right, because this was the supply level that led to this short-term rally drop here. So you can see the market broke down here, then came and created supply here, then continued downwards. So on its way up, it served as a support. And so when we saw the market break above here, they came back to get some more retest here and then rally. So ideally, I like to see us break below this yellow bar here around this 1.24600, and then it will now expose the 1.23200 mark. All right, but for me personally, I would like to see, like I said, I'm not convinced about the fact that we had this this meltdown here. I'm still eager to see the market break back down below this yellow bar here, and then obviously expose the 1.23200 region, and then hopefully this level doesn't hold, so that we can see the pound sterling collapse all the way back down to this blue bar here, which is 1.21450. All right, so prime target first for this guy is 1.21450. However, we have some little obstacle here, which is the 1.23164 region. Once this is cleared here, we have a clear space to 1.21450. All right, so that's about the pound sterling. And also contingency plans, same way we did for the euro dollar, is in the event that the market actually chooses to rally all the way up here, we have what we call supply levels here. All right, so it could potentially come into the supply here. It has options, and there are so many options here. Okay, so either this one or this one. However, I am 70% bearish on EU and GU, pointing south. And then moving into next week, I like to wait and see how the market reacts around this level here. And if I see a decent break below and a pullback here, I'll be hopping on this trade and then taking it all the way down to this yellow bar here. All right. So step by step, we have about 320 pips to go. All right. So we have enough space to place our trades. So that's that for the pound sterling. So the next part on my list is the AUDUSD. Now, for AUDUSD, if you've been with me for a while, you would actually get to understand the reason as to why I don't really talk about AUDUSD as much, because I don't believe that this pair is ready to move. All right. Technically, this guy is in a range, but I just don't believe that this guy is ready to move because he's quite indecisive. He's quite indecisive. And this now reminds me of what happened in 2023, February, March, where this guy was stuck in a range for five whole months. I think about 3 to 5 whole months. All right. So that's the thing with this AUDUSD guy, is just that it's quite, I don't know, man. It's just the pair is so indecisive, and I pride myself on trading the most obvious things. I'm not, there's no, I keep telling you guys that there is no award or reward anywhere that someone gets for the guy who trades the most complex and indecisive pairs. All right, so I take the easiest of all trades, the most obvious trades possible. However, for AUDUSD, this is what's happening currently. So if you go from the weekly time frame, you can actually see the bigger picture, so you know exactly what is happening on this guy long term. All right. So overall, we are bearish, obviously, on EU, on GU, and AUDUSD. However, the market seems to be pulling back aggressively into this supply level here. All right. And if I look closely here, we are still on a downtrend. Right? So this is creating series of lower highs and lower lows. And if I bring my trend line just like so, you see from here. Actually, let me just look at this guy properly. Okay, so we had this bounce off of here. So we had the first touch, second touch, and the market broke above here and came back to retest this outer part of this trend line here. And this is quite tricky at the moment because it's a 50-50. If the market can break above here, then this trend is due for a reversal on AUDUSD. However, this level is a solid supply level. All right, it has held in the past. It has held for years. So this is also a fee play. This is also if you can actually play where we have the market coming in deep into the 0.5 region, and then this is also a supply level. So I'm watching AUDUSD closely if I do, because I mean I'm still bearish on this guy because I don't believe in any reversal happening anytime soon, especially if you consider what's happening on gold at the moment. Gold has a long pullback to do, which is a bearish pullback. So I don't see the reason as to why the dollar will be bullish and AUDUSD will now be bullish at the same time. All right, so I'm actually bearish on this guy, provided that we stay below this yellow bar here. Now, in the event that we actually break above this yellow bar here, I think we may start to consider some short-term, bullish trends to at least this supply level here at 0.68495. All right. So, however, provided AUDUSD remains below this yellow bar here, I'm still bearish on AUDUSD. However, when I be taking any trades on this guy, I would definitely not trade this guy next week, not even the weeks coming, because this is still stopping a range, and it might take us another 2 weeks maybe, to get out of this range. So for next week, next 2 weeks, I'm keeping a close eye on this guy with no trades at the moment. So provided AUDUSD stays below this yellow bar here, we are still bearish. In the event that we break above this yellow bar here, it exposes the 0.68536 region, and then obviously this blue bar here. So the next pair on my list now should be NZD-USD. I've been calling NZD-USD to the downside for a while now, and well, NFP came and did this thing. FOMC came did this thing. However, one thing that you must understand, and which is something that you must also have it at the back of your mind as you tend to progress with your trading career, is that the fundamentals tend to line up with the technical analysis in the sense that if the technicals are pointing to the south, that is, they are pointing bearish internal. And hold on, let me just be sure that this is still recording. Oh my days. I have to start again. Hey there, beautiful traders, welcome back to my channel. My name is Desmond Samuel, and this is yet another episode of our weekly outlook. Now, if you're new to my channel and you're wondering what this weekly outlook thing is about, so this is just a segment on my YouTube channel that I have actually dedicated to coming on here every single weekend to give you guys the best trading opportunities for the weeks ahead, and then obviously explain the recent price action that have been happening, in the markets. So what we have here is NZD-USD. All right, so if you've been with me for a while, I have been highlighting this guy to the downside in recent times. Okay, and I like to do something called the tunnel analysis, where I go from the monthly time frame, I work my way to the weekly time frame, to the daily time frame, and then to 4 hour time frame. To kind of just have like a better perspective of the entire thing. So this, as you can see here, we're actually bearish on this guy. Okay, however, there seems to be a stubborn level around this point, say that the market is just having issues breaking below. All right, and that level has served as demand in the past, and that is why if you look left, you can clearly see that the market came on here and then rejected off of it to the upside. All right, so this is a level to contend with, obviously. But from the monthly time frame to the weekly time frame and then the daily time frame, we actually see bearish on NZD/USD. So once again, if you want to catch up on this series, I advise that you stick to the end of this video, or you can actually go back and watch my previous weekly outlook. So we have been forming series of lower highs and lower lows here. All right. So if we count away properly here, you see that we have a high, we have a low, lower high, equal lows, equal high, lower low, lower high, lower low high. So technically, the market ought to have come in here to give us a lower high, which is something that it has done. Now we have space, we have clear space to the downside. We have about we have about 8,000 pips to go, right, to this next bar right here. However, we have a minor obstruction, which is this guy right here. Remember that a market ran into this point here, and then sorry, a market fell into this blue bar right here, and then reversed all the way to the upside. So now, obviously, it's going to put some bit of challenge on our way down as well. All right. So what has stopped the market in the past most likely stop it again in the future, or slow it down. So now we have a trend. Obviously, the overall time frame, monthly time frame, weekly time frame, they are pointing to the downside, and obviously the daily time frame also. However, now I had highlighted this upper level to the downside, and now this was happening. Now we following the FOMC numbers and NFP numbers, we actually pulled all the way back in. So this was the broken demand level that became supply here. This was the demand that became supply. Then obviously the market kind of rallied into this whole point here. And if I bring my fibs just from here, from swing high to swing low, you see that the market came right into the open fair region here, and this guy is bearish at the meantime. Now, however, I would only be convinced to hop on this guy if I see a daily candle break back down below here. Now, provided that we are above this level here, because this is also a break of structure, like it or not, this is a break of structure. All right, so now we need to see the market break back down below here. Once we see a decent break back down below here, then it will now be easy for me to hop on a trade, and then obviously write this guy all the way down to 0.5799. So obviously take out my money first here, and then let the rest go to 0.5799. So all right, now in the event that this doesn't happen, actually hold on, let me check something real quick. Let me be sure. Okay, so the market actually came into the trend line as well. Trend line supply level. All right, so 1, 2, 3, 4, 5. So this is the fifth touch of this trend line here. So this should be the trick. This should send this guy down. However, we watch closely because the market could easily break above this yellow bar and then start pointing upwards. All right, so this is why I cannot stress enough. You guys need to have your risk management in place. You cannot put anything past this market. Anything can happen at any time. All right. So on the 4 hour time frame here, I want to see us come in and put in a bearish engulfing candle inside of here, because if you look closely, the market is still testing the outer part of this trend line here. So we need to see a decent break bar down below this yellow bar here, and then obviously take our first TP here, then overall TP down here for the meantime. All right. So however, I'm still bearish on this guy, provided we stay below this yellow bar here. Now, in the event that you actually break above this bar here, this would expose these other supply levels here. All right, and then obviously this blue bar. So this supply level first, and then this blue bar. So next week will be the deciding week for us, getting into the medium term trend. Are we actually going to turn bullish, or are we going to turn bearish? Then in a short while, I'll show you guys what the dollar index has been doing recently, so you also know how to plan your trades and go about protecting your capital in the long run. So the next pair on my list is the euro dollar we have here. So this is the EURUSD. and it has something similar to that of the NZD USD. So it's quite, once again, I like to go from the monthly time frame to the weekly time frame to the daily time frame and 4 hour time frame to just have like an overall perspective of where this guy is headed or what this guy is doing at the meantime. So if you look at the monthly time frame here, we have been putting a series of lower lows and lower highs. And we got here, we put in a double top, and we put in an impulsive move after the double top, and then this is that pullback that came into a supply level. So this guy is bearish on the monthly, bearish on the weekly, bearish on the daily. All right, so we are actually pointing south at the moment. And if you plot your Fibonacci like this, from swing high to swing low, you can see that it came right into the 0.61 region and then folded or melted all the way back down. So now scaling to the weekly time frame here, we have something, some chart pattern that I had actually highlighted all through to 2024, all right, and late 2023. So this is what we have here. So this is a head and shoulders pattern here, and if you look to the right hand side, we also have a head and shoulders pattern. So this is like double confirmation of the bearish drop on this guy. And we had the neckline breakout, all right, which is also in line with this demand level here. So this was the neckline of this other chart pattern here, head and shoulders pattern that got broken out. And this was a weekly bearish engulfing candle break below, and this is the pullback. So scaling down to the daily time frame here, what tends to happen? What happened here was we had FOMC this week, and we had we had NFP, both figures coming out weaker than expected. And now this is the chart pattern breakout here. So this is why we had the pullback. And if you look closely, this pullback happened right into it came right into the Fibonacci point here. So this was the first touch, second touch. This is the third touch of the trend line, and in this game, we actually believe that third touch of the trend line tends to be the trick. All right, so I'm expecting the week ahead or weeks ahead. I'm expecting the E to roll over to the downside. Obviously, my prime target for the euro is 1.05000. All right, however, I'm still not convinced yet. Now the reason as to why I'm not convinced is because I can see some form of structure here. And the only way I'll be, obviously this is a fake out here. All right, this is looking like a fake out. Now, provided that we stay above this yellow bar here, I'm not convinced to place any trades on this guy. I will only be convinced to place a trade on this guy if I see a breakback down below this yellow bar. Then I'll be so convinced that this is a fake out. And what tends to happen after a fake out is that the market tends to move in the opposite direction exponentially. That is easily it will drop, because what has happened here, it has trapped a lot of early sellers and early buyers. All right, and now it now drops. So this is some form of liquidity sweep. So now if you look closely, we have something called structure here. So this is structure. This is the structure that was broken up here. So ideally, I'll wait for us to have a decent breakback down below this yellow bar, then I'll drop this down in his head. Now, reason being that when we were dropping, this guy served as a supply level, and if you pull this guy all the way to the past, you see that he acted as some level in the past. So I don't want to be selling into support levels. All right, I need to see us break below that structure level there. Then it will make it a lot easier for me to place a trade. And you can see this was where this market turned around here. So ideally, I'll be sitting on my hands all through and waiting patiently for the market to come and just break below this yellow bar here. Once it breaks below this yellow bar here, now I have space to the downside. All right, I've got enough space to the downside here. Right from 1.06800 to 1.05400, a class space. All right, class space. Obviously, first TP here, right? First TP here. You want to always take out your money at the 100% retracement point. All right, so first TP here, and then obviously the overall TP down at the blue bar. And if I measure this gap properly, I have about 844 pips. Not that much, but still enough to put something in our pocket. So that's that for the euro dollar. The next part on my list will be the GBPUSD. So for GBPUSD, we had something similar also. So this has a similar structure to that of euro dollar, right? And if you look closely here, we had a decent pullback as well. Now this is the 4-hour time frame, and you can see how nice and neat my chart looks. You must always pride yourself. I pride myself on having a clean, nice, clear chart. This is my office. I really clean. So you can see here we've had this very trending for a while. We'll have the high, the low, lower high, lower low, lower high, lower low, lower high here. So technically, even if this guy is going to reverse to the upside, we need to see this guy put in at least an equal low here. Price action principles. which is why I strongly recommend that you grab my course. I check the link in the description. It will bring you straight to my Telegram community, and you can grab the course where I get to teach you personally. All right. Now the course is currently on a 30% discount, in the sense that if you're enrolling now for the mentorship program, it costs about $70. However, by the time my course is online and it has been uploaded to the portal, you have to pay the standard fee of $100. So I strongly suggest that you grab the opportunity, because the market is about to give us some juicy opportunities, for the weeks ahead. So for NZD, for GBPUSD here, same thing. This is a break of structure here, break of structure retest. So I have some form of level here. All right. So I like to see the market come in and break below this yellow bar here before I can actually hop on it. You can see the fake out. You can see the fake out, and also the market just came into trap early sellers here. Guys, look at the amount of pips for stop loss, over 100 pips of stop loss. All right, run. So this was a liquidity sweep here. So this is a clear case of market manipulation. And once again, I teach this thing in my mentorship program. I teach you how to go about avoiding things like this. All right. So whenever you have a trade at a level that is, you have the market pull back to a minor level or a major level, you must wait for the bounce. You don't trade what the market is on the level, trying to find its way around it, trying to decide if it's gonna bounce up or break above or break below. You have to trade the bounce, let the market react to the level, and then you act on it. All right. But for me personally, I like to see the bounce up here, that is break below this low bar here and pull back. Then I'll now use it as my own supply level, since it's acted as supply in the past. I'll now use as my supply level to drop this guy all the way down. All right, so it's easy peasy. All right, I want to see this market give me some extra confirmation, because right now I'm not convinced. At the moment, I'm not convinced. Yeah, so like I said, guys. Yes. So like I said, guys, I'm not convinced that I have to see this market break back down below here, this number, and then I'll now be forced to go down to my 1 hour time frame. Obviously, not considering 24-hour time frame. I go down to my 1 hour time frame, because I want to use the tightest stop loss possible, right? And then turn this into maybe a 1:3 risk reward, or thereabout. So I probably use like a 30 pip stop loss to catch about 142 pips. All right, so that is a decent 1:3, 1:4 risk reward ratio on this guy. So long story short, I'm actually bearish on GBPUSD now, provided that we actually stay above this bar here, above this bar, and then we start to rally all the way up. I'm targeting this supply levels here, and obviously this second supply level right here. All right, so that's that for GBPUSD in a nutshell. I'm 80% bearish on this guy, provided that we actually break down back below this yellow bar. Once we do, this will now be a decent entry opportunity for me, because the worst possible has happened. All right. So the next pair on my list would be NZD card. At the moment, it seems to have blown out of the range that we're trading it in, and I'll be sitting on my hands, waiting to see what this guy has to give us, So I think I'm going to wait on this guy for about another 2 weeks. Let the market just decide. Let it just make up its mind, because now we have this guy breaking above this trend line here. This is not looking like a decent breakout. However, I'm not convinced, because of what the dollar index seems to be doing at the moment. So I need to see us break back down below this yellow bar here, so I can actually drop this down here, because this seems to have come into this supply level. Okay, this is the supply level right here. So I'm sat on my hands, patiently waiting for this guy. Let me see what this guy wants to do, because this is also a Fibonacci play, right? So it's a bit of a 50-50 points now for NZD card. Now, if you had broken above this yellow bar here, now that would have made a lot more sense for a bullish short term trade. However, However, we stayed below the supply level, so this is still exposing this yellow bar right here. Then obviously subsequently down here. So for NZD card, nothing much at the moment. I advise that you give this guy another 2 weeks. Let us see what the market has to do. All right. So for the S&P 500, we are still. I was actually highlighting this guy to the downside, all right, because I mean, when you have a trend as massive as this, you had a nice run to the upside, late 2023. We had a nice rally to the upside here. Obviously, this was the inverted exodus pattern we had here. So this is an impulsive move pullback from inverted exodus pattern, break off neckline retest here, and blow all the way up. So now, once you break a level, technically we tend to come in for a deeper pullback. All right. So however, like I said earlier, NFP and FOMC did this thing, and we started to see this guy, start to rally to the upside. But I'm still not convinced because this is still a supply level, right? So the market is still at a supply level. So we could actually potentially see this guy drop all the way back down here. However, for those of you guys that are pullback traders, which I don't advise, but for you guys that love to trade pullbacks, obviously wait for confirmations around here like this. So wait for a breakback down below here, and this will now expose these levels. All right. So for the S&P 500, I'm actually bearish at the moment. All right. So we need to see us break, provided that we stay below this yellow bar here. In the event that we actually rise above the yellow bar, then we have problems, right? Because this could actually continue all the way up. Now, should that happen, and when and if that happens, you need to just simply bring this bar right here and say to yourself, okay, fine. So since you've failed to pull back decently, to give me a decent pullback, because I'm not gonna lie, this pair does not pull back like that. It enjoys going up. It's just a very, very bullish pair, right? So you now say to yourself, okay, fine, since we have something like this, let us see a break above this yellow bar around the 5,275.53 basis points for S&P 500, and this will now expose the 5,700 basis point level. All right. So like I said earlier, if the market does break above here, then your next obstacle should be, or condition should be, 5,275.53 basis points. In the event that we now break above here, you now have enough space to the upside because there's nothing stopping this guy from rallying all the way from here to here. If we do, like I said, break above here for about 361.67 pips. All right, still a lot of pips to go. Now, that's that for the S&P 500. Now for gold. Gold has been doing some decent stuff lately as regards price action. So this is gold here. Let's go from the weekly time frame and see what we have on gold so far. So this is gold. Broke out of this all-time highs here to create new highs. Now, when you swing up here, this guy here, this XAUUSD, which is gold here, created a demand level here. Okay. Now, this demand level is obvious on the weekly time frame, and then obviously obvious also on the daily time frame. All right. So now, whenever the market creates a demand level, it tends to come back to retest that level, right, before it now rallies all the way up. Which is the reason as to why I strongly feel like actually USD will pull all the way back down to this 2,560 region. All right, so $2,560 an ounce region here, because this is also a Fibonacci play we have from swing low to swing high, and you can see it sits right at the 0.618 region. So the market should potentially pull back down here, play around this level a bit, and then we should actually go rally and blow all the way to maybe 2,700 basis, $2,700 an ounce for gold, right? So long story short, I'm actually bearish on gold at the moment, provided that we actually stay below this level here. All right. So provided that we stay below this supply level, I'm actually still bearish on this guy. So we need to see a decent pullback to this point here. Once we see the pullback to this point here, guys, we have all the way to go, all the way from here to about, this is looking decent. So this is about 5,000 pips, all right, to the upside on gold. All right, about 5,000 pips to the upside on gold. So that's that for gold. However, now once again, for those of you guys that are pullback traders, all right, just wait for the market to come break below this demand here. All right, a break below this demand level and a pullback here should expose obviously this other demand, and then obviously this level, and then all the way back down here. That is how you trade, the market step by step. All right, so make sure that your market levels right, and make sure you use proper risk management when you're trading gold. Like gold is not like Euro USD where you can risk anyhow. This guy, this is a luxury pair, all right. So you need to be careful, and also be sure to watch your fundamental calendar as well, and then also take note of the geopolitical events happening around the world, because they tend to influence gold and oil and silver prices, all right, and then obviously Bitcoin prices. For US oil is actually in a deeper pullback, all right. And once again, let's go from the daily time frame. Actually, it's clearer. So I've been highlighting US oil to the upside for a while now, and we actually failed to break above, or rather give us a decent entry confirmation, which was my counter trend line break. If you see that, so now we have the oil pulling back down. It actually looks like it has broken below here. However, I'm still not convinced that this is in for a bearish drop. Now, I will only be convinced if I do see us clear this level. All right, this is also a demand level, and if you plot your fib like this from swing low to swing high, you can see that the market is still sitting on the 0.618, between the 0.618 and the 0.5 region. So ideally, we could see a bounce off of here. We could see a bounce off of here, or we could actually continue all the way back down. Now, for me to turn into a bearish bias on oil, we have to clear this buyer. So this buyer is our last line of hope. If this bar gets broken, it exposes the 67.174 dollars a barrel for oil. All right, so that's that for oil. A break back down below this brown bar here, we will see oil at $67.74 a barrel for crude oil, and a break above here, that is this. Using this trend line as an example here, we should see oil at $93.73 a barrel. So that's that for US oil. The next pair on my list now would be BTC. Now, guys, BTC has been causing a lot of problems lately, and this is one of the benefits of being a part of my Telegram community, because I let you guys know these things on time, so you know how to prepare yourself. So what we have here is decent pullback. All right. Now for BTC, it's simple. We have a demand level here. All right. So, and the market has not given us any form of decent pullback yet. However, the market started to print around the higher the new highs here, which was some $3,767.39 per coin for BTC here. We started to see a decent trend forming here. We will have the high, we have the low, lower high, lower low here. However, now that we have actually failed to remain below here, this is now looking like a fake out for BTC, all right? And what this means is that we could potentially see this guy, rally all the way back up. Now, that is unlikely because we have a trend line acting down here. Okay, we have a trend line acting down here. So ideally, I would, because I'm not gonna lie, we are due for a decent pullback on BTC. We need to see a decent pullback on BTC, and that lines up properly with this Fibonacci level from swing low to swing high here. All right, so we could actually see BTC at $52 per coin. All right, we could actually see BTC around that level. All right, so like I said, we had hit all-time highs and created new highs. However, at that point, then we started to consolidate a bit, and we never had any decent pullback. We've not had any decent pullback for this guy here. So it just started printing a high, a low, lower high, lower low here. So ideally, we should come into this trend line here and play around it a bit, and then maybe continue dropping to the downside. But I'm still bearish on BTC, provided that we stay below this trend line and this green bar here. Now, in the event that it's actually break above here, we should be targeting obviously this supply levels here, which is around some 2,345 dollars per coin, and then obviously, all the way up to wherever the bull run takes us. So however, I'm still bearish on this guy, and provided that we stay below this trend line and this bar right here. So ideally, this is looking like a fake out for early sellers, because this was also a demand, sorry, it's a supply level here. All right, so the market just came in now. So this is either a liquidity sweep or a reversal. However, next week will tell. All right, so for BTC, I'm calling BTC to $52,000 per coin, provided that we stay below this trend line and this bar right here. All right, so that's that for BTC. And the last pair on my list now will be the dollar index. Now, I said to you guys that you should stay tuned to the end of this video, because I was going to explain what is happening, overall in the market. So we have the dollar index here. All right, so we had something funny happen on Wednesday and on Friday. All right, Wednesday was the Fed's FOMC meeting, and then Friday was the NFP. So we had this descent trend here on the dollar index, lately. So we had this low here. This is a high, higher low, higher high, higher low right here. So this is looking like a higher low formation, which is here to fulfill technical criteria. And this is still pointing to the upside, provided that we stay above this low bar here. Now, I saw something happen over the week, which was here. So whenever I have things like this happen, once again, this is something I teach in my mentorship program. Whenever you have something like this happen here, where we have lots of liquidity trapped below here, you need to understand that the actual demand level is here. This is the demand level, right? And if you take your fibs from swing low to swing high, you can see that the market came right into the 0.618 region and faked out a lot of early sellers and a lot of early buyers on other pairs. So now this guy came here to do what we call a liquidity sweep. All right, so this is a liquidity sweep whereby I have all manner of orders stacked up here. All right, long trades stacked up here, limit orders stacked up here, because you see that whenever the market comes in here, it triggers their entry and then goes in their direction. However, following FOMC and NFP, the market just came right for the liquidity sweep. And what has to happen after a liquidity sweep is a rally in the opposite direction. So this is looking quite bullish at the meantime. Now, provided that we actually break back above this black bar here. All right, so I'll be waiting patiently to see how the market reacts around this level. Ideally, if we're going to go all the way up to 107.031, we should actually see the market break above, fold back above this black bar right here, and then it now exposes 107.3.031. All right, so that's that for this episode of our weekly outlook. And make sure that you subscribe, leave a like and a comment, and then stick through with me as I build this my YouTube channel for us, and then for each and every other struggling trader out there. All right, so I'm here to give you guys money 2024. I'm not getting any guys. You can see I do this week in, week out. All right, so thank you so much, and peace out. See you in the next episode. Bye for now.